Good morning, ladies and gentlemen. Welcome to the Hampton Roads Community Action Program, Whole Family Approach Innovation Lab. My name is Carl Shirley. I'm the Director of Planning and Evaluation here at the agency. To give you a little background on the Hampton Roads Community Action Program, we are a community action program serving the residents of southeastern Virginia for 60 years. Providing services in the field of education, housing, emergency services, and a variety of other initiatives. The main goal of the HRCAP is to help families find a pathway from poverty to prosperity and creating self-sufficiency in the communities we serve. Some of the programs that we operate include Clean Comfort, which provides showers and clean change of clothing to homeless individuals in Newport News. We also have a comprehensive housing counseling, which provides housing services to individuals who are looking for housing or have a housing crisis. So we help them with rental assistance and rental counseling, mortgage relief counseling, things of that nature. We also do fair housing, designed to help citizens who are facing housing discrimination resolve those issues. We have the 4-year-old pre-K initiative, which serves children younger than the age of 4 in the city of Hampton, low-income families, that provides them with comprehensive preschool education and a variety of services to help the family. We also have a Head Start, which is our largest program. We serve over 900 children. Again, most of these are under the age of 5, and they receive supportive services as well as comprehensive preschool education. We have the Pathway Home 3 program, which helps individuals who are incarcerated prepare for employment when they are released, and provides them with wraparound services when they are released, including transportation, assistance with housing, and other things that they may need. We have Project Discovery, which serves middle and high school students in Newport News and Hampton, helps them to prepare for post-secondary education, college or university, or to find a career path that they are interested in. We have the RISE program, which stands for Reaching Independence Through Savings and Education. This provides clients with the opportunity to get a savings match. They can earn up to $8 for every dollar they save, and this can go toward education, housing, transportation, or other things that they need to purchase. We have the senior program, which allows seniors to enjoy a meal, and we do a lot of events for the seniors around Christmas, Valentine's Day, that sort of thing. We do veteran services, which helps veterans who are in need of housing, rehabilitation, especially those who are have service-related disabilities and need to have their house need to have ramps or other kinds of changes made to their housing. We also do Virginia Cares, which is another reentry program helping individuals who are transitioning from communities, and Workforce Development, which is kind of an umbrella program that provides services to a lot of the clients that are in our other programs and helps people prepare for employment through education opportunities and job placement assistance. So we do a lot in the community, and the program we're here to talk about today is the Volunteer Income Tax Assistance Program, where we prepare taxes for low income and other populations at no charge, allowing them to get more of their refund and allowing them to claim tax credits that they may not be aware of. So I'm going to transition to our, well, as soon as I get it back on the screen. Hold on. So this is a presentation we call Taxes Made Easy. And the speakers today are me, Carl Shirley, Director of Planning and Evaluation. Patricia is our tax program monitor, but she's preparing returns this morning, so she's not available to join us for this conversation. And then we'll also hear from Thomas Sense, who is the HRCAP Housing and Financial Literacy Services Manager. So what is the VITA tax program? It's designed to provide no-cost tax advice to members of the Hampton Roads community. Locations are throughout Hampton Roads. We serve both the south side and the peninsula. The sites are staffed by tax professionals who are able to assist you with your taxes and are trained using IRS standards. And they are, the taxes are prepared for free. So this is a chart showing the last few years of our program, the services we've provided. Last year we did 2,433 tax returns through our 11 coalition partners. And we brought over $2,800,000 back into the community. That included $303,000 in earned income tax credit money. So, general tax information. So the U.S. tax system, as we know, was created in 1913. Many of the taxes we're familiar with were developed in the 20s and 30s. It's a progressive tax system, so those with higher income generally pay more. And the Internal Revenue Service, which is a federal agency in charge of collecting and reviewing tax documents and processing tax returns. So this system, I think we're all familiar with it. The taxes are deducted from each paycheck and sent to the government for payment. At the end of the calendar year, you're required to file your paperwork reporting how much money you made and how much was paid in taxes throughout the year and what is still owed to the IRS. Your employers provide you with documentation regarding your income by January 31st, and then you have until April 15th to file your tax return. Okay. Before you file, you need to get all of your gather all your tax documents, choose your filing status, choose between standard deduction or itemizing, file your taxes, and then prepare for your next year's filing. So the documents you may need include a W-2 for any employment, 1099s, which show other tax deductions that have been reported to the IRS, mortgage interest statements, investment income statements that report the amount of income received or loss reported from investments, any charitable contributions that are made, and any additional receipts and supporting documentation, especially if you need those if you're itemizing. Additional documents you may need are for your previous year's tax return, government issued IDs for for persons filing the return, Social Security cards for you, your spouse, and dependents, and both spouses must be present to sign. You choose your filing status based upon your situation, single if divorced, separated, or not married, married filing jointly if married and both agree to file a joint return, married filing separately if you don't agree to file a joint return. Head of household is for someone who pays 50% of the household expenses and have a qualifying dependent, and then qualifying widow or widower if the spouse dies and you don't remarry during the tax year. Standardized versus itemizing. Standardized deductions is a fixed amount set by the IRS that will be deducted from your adjusted gross income. This deduction for single or married filing separately is $14,600. For married filing jointly, $29,200, and for head of household, $21,900. If your total qualified expenses are greater than the standard deduction, you may want to consider itemizing, and you will need to provide documentations such as real estate taxes, real estate tax information, gambling losses, medical dental cost, and charitable giving. So there are a variety of tax credits, and the point of today is to make everyone aware of these credits, especially the earned income tax credit. So the earned income tax credit, the child tax credit, the child dependent tax credit, and education tax credits are available. So the earned income tax credit is for people who work and have earned or adjusted gross income under $56,838, or if married filing jointly, $63,398. You need to be under the income requirements, live in the United States for more than half of the tax year, and you must be a certain age at the end of the tax year. Qualifying children must have a valid Social Security number, meet the test for a qualifying child, and not be claimed by more than one person. So the earned income and adjusted gross income must be less than, again, $56,838 if you have 3 or more qualifying children, $52,918 with 2 qualifying children, $46,560 with 1 qualifying child, and then $17,640 if you have no qualifying children. And then the amounts, the maximum amount of earned income tax credit you can receive is $7,830. So the child tax credit of $2,000 per child for the 2024 tax filing year. Qualifications include medium adjusted gross income below $200,000 for single filers or $400,000 for joint filers, and a qualifying child under the age of 17 who is a U.S. citizen or resident alien and who must be claimed as a dependent. Child independent care credit is designed to help you pay for the care of eligible children or other dependents. Calculation is based on income and percentage of expenses occurred during the care of dependents, and the qualifications: the dependent must have lived with you for more than half of the year. They can be claimed as a dependent on your tax return and have been a U.S. citizen, national, or resident alien. Education credits. Education credits help with the cost of higher education by reducing the amount of tax owed. You may get a tax refund if the tax is reduced to be less than 0. Education credits have similarities, but there are some important difference, and your VITA tax team member can help you see which you might qualify for. You must be a dependent, you or your dependent or third party must pay for qualified education expenses. The student must be enrolled in an eligible institution. And the student must be a spouse or dependent, so be yourself, your spouse, or a dependent listed on your tax filing. So the American Opportunity Tax Credit, this is for qualified education expenses paid for the first 4 years of higher education. The maximum amount is $2,500, and the qualifications are that you have not finished the first 4 years of higher education at the beginning of the tax year and do not have any felony drug convictions at the end of the tax year. Lifetime Learning Credit is designed to help pay for undergraduate, graduate, and professional degree courses. There's no limit to the number of years that can be claimed. The maximum credit amount is $2,000. So, what do you do after you receive your return? Now we're going to dive into financial literacy. Thomas?
Well, good morning, everybody. It's a pleasure seeing you all here today. As Director Shirley mentioned, my name is Thomas Sense. I am the Housing Program Manager here at HRCAP. And as a shameless plug about my own program, our purpose is to get people into safe and affordable housing. So that may mean a rental. That may mean working with somebody one-on-one to get them to the point where they feel they are comfortable in their own living situation. But ultimately, we want you to build from that and to be able to become a homeowner one day and have your own piece of the American dream. And we do that through a couple different ways, through educational efforts like this one, and from working with people one-on-one in a financial coaching session. So if you're out there and you have concerns about your housing situation, or you have dreams of becoming a homeowner one day, we want to speak with you. And before I really get into it, I wanted to thank HRCAP for allowing me to be a part of this event. VITA is a program that has done incredible work in the community. It has saved people thousands of dollars. It is staffed by amazing people, and it has put thousands more into people's pockets when it's needed. So thank you very much for allowing me to be part of it. And I truly hope that you will take advantage of this fantastic program. All right. So we spoke a little bit about what to do to file your taxes and to prepare for the coming year and get your refund. I'm going to talk with you a little bit about shifting your mindset. And the first thing is to prepare for the coming year. So after you have completed your tax return, there's a couple of different things to keep an eye on. Number one, you want to think ahead a little bit. So make sure that you hold on to your tax return, keep your documents available for the coming year, because you're going to have to file again, obviously. Make sure that you have that on hand so your tax preparer will have it for easy reference. All right. There's also a lot of emphasis on getting your refund a little bit sooner. You're probably going to see advertisements for getting your tax refund quickly, and that's typically through a loan advance program. I would caution you against using these due to the costs. They have ranged everywhere from a few $100s flat fee for what might be a very small return to a percentage of your actual return, which can translate to hundreds of dollars for you. So as much as possible, I'd encourage you to avoid using them and take advantage of programs like VITA that can help you free of charge. And my last little tip and trick is, now that you know a little bit about what to expect from your tax filings, take a look at your pay stub. You may be in a position where you can adjust the withholdings either up or down. If you're owing a bill, then you may want to nudge it up a little bit so you don't have this large expense come tax time. And if you're getting a very large refund or a little bit of a windfall, then you may want to take a look at what you're paying throughout the year so you have a little bit more in your pocket, and you have it on hand as needed throughout the year. Now this is what I mean when I say start changing your mindset. Far too often, we have a tendency to think in terms of the here and now. We'll look at money, we'll look at an immediate refund, and we probably won't think too far out. As much as possible, I'm encouraging you to have a plan in place, both for your tax return and for your finances in general. And the way you're going to do that is you're going to be setting goals for yourself. And So think of it like running a business. This is your life. So again, so think in terms of something short term. That could be as simple as preparing for a vacation, or getting caught up on bills, or or doing a little something fun for yourself that you've had on your mind for a little bit. Or it could be something long term. I mean, I think everyone in here would like to retire one day. We want to send our kids to school and on to higher education. Those are all things that, if you get too lost in the here and now, it'll be here before you know it. So what I encourage you to do is to start planning and mapping these goals out. Write down what you want to do and the timeline you want to do it in. So you may, for example, say, I want to retire in 20 years as a long-term goal. I want to have X amount of money set aside. Yeah. Or for the short term, you're going to look at that tax return and what you're projected to get, and you're going to say, I'm going to put so much towards my house fund. I'm going to put so much towards my emergency fund. Like, you're going to break it down so that you know where every dollar of that return is going to go. And also, again, I'll solicit a little bit of opinion, but what do you all think of this one? Making sure you have a little bit set aside for your own enjoyment. I see a lot of nods. For this time of year, for a lot of people, this may be the most money that anyone has at any given time. You've basically deprived yourself the entire year. The temptation's going to be there, and behaviorally speaking, you're going to need a little bit of an outlet for it. What I encourage you to do is to plan around that. My rule of thumb is no more than 10 to 15% of your returns should be going towards something like this. But a lot of that's going to be dependent on your own situation. But regardless of what you do, make sure you build it into these goals, into these plans, because you don't just want to get by. You want to thrive, and you want to enjoy the ride a little bit along the way. So make sure that you're accounting for that. Excuse me. I think we lose the clicker. Yeah, well, I did. Sorry about that. So here's the tips and tricks for you to remember. Make sure you plan ahead. Set these financial goals for yourself. Put them on paper. Make them real. Think about not just what you want to do, but when you want to do it. And that's how you're going to work towards it. That's how you plan. And once you get the tax return, think about how you want to apply it. The ball's in your court at that point, and I can tell you even from personal experience, if you don't account for it in your own mind and put it to paper, if you don't have a plan for those dollars, they'll find a way out there, whether you intend to or not. And so resist the urge to overspend, but again, make sure you plan around having a little bit for yourself. The story I usually tell people is when I was 23, I had a car repair that ate up every dollar of my tax return, with the exception of maybe $30. And that $30 went towards taking my mother out for lunch and having a little family time. Something very, very simple that didn't cost a whole lot. And last but not least, make sure you keep your documents on file. The IRS can go back and take a look. So for at least, I believe, 3 years, you want to have that on hand. All right. So I'll open up the floor for any questions if you have them. No? All right. Well, it's been wonderful speaking with all of you today. Once again, FIDA is a wonderful program. And these are just some of the locations that HRCAP supports through this program. So if you need your taxes prepared, you couldn't be in better hands. Thank you so much.
Thank you, Thomas, for providing us with that valuable information. Are there any other questions about VITA, the tax program, or anything that you've heard? Okay. We'd like to thank you. We'd like to thank everyone for coming out and joining us this morning to learn more about the Earned Income Tax Credit and other services available from the Hampton Roads Community Action Program. Also, thank you to anyone who is watching this online. HRCAP will continue to work in the community to help people and to provide these services that help people to get ahead in their lives. Thank you.